In this video, I will test an indicator based on the crossover of two moving average that is a forex strategy very popular among day traders. Is this type of strategy really worth it? Let's find out. Stick to the end of the video to see all the proven results. I'm again here on TradingView, which is the platform that I use to backtest every indicator and strategy. I will leave the link in the description. To backtest the crossover strategy, I will use an algo that I created. I will perform the backtest on the daily time frame, on the 28 most common forex pairs, and using in-sample data consisting of the years 2010 to 2014, 2016, 2018, and 2020. It's the same sample setup as in my previous videos, so in the end, we can compare all indicators and strategies. If you don't know what I'm talking about, you can check my last two videos where I backtested 10,000 times the SSL channel indicator and the Arun indicator, which provided more than 500% profit together. Links in the description. Let's now add our moving average crossover indicator, which in this case is called Trend Strength by Bitcoin Bing. The settings that I will use are the default ones, which in this case are 10 for the fast moving average and 25 for the slow moving average. This indicator also includes a histogram so we can see with detail when the moving average crossover happens. Using this indicator is quite simple. Whenever the fast moving average, in this case the green line, crosses above the slow moving average, which is the red one, it is considered a long signal, and whenever the opposite happens, it is considered a short signal. Also, I am going to search for the ATR indicator, and I will use it with the default settings. I use the ATR indicator to place the stop losses and the take profits on every single trade. For stop losses, the value will always be 1.5 times the ATR pip value, and for take profits, 1 times the ATR pip value. So, I just finished coding this indicator on my algo with the respective buy and sell orders. And another important point in my code is that whenever the indicator gives a new signal before the previous one is closed, the algo will close the position that was already open and enter in the new one. Now let's see if everything is okay in our code. Here we have an example of a long signal. The algo considered the entry point after the closure of the signal candle given by the indicator. The stop loss value is 1.5 times the ATR pip value, in this case 1.5 times 63.8, which is 95.7 pips, and for the take profit the value is 1 times the ATR pip value, so in this case it's simple, 63.8. This trade would be a profitable one. The take profit was hit here, and as you can see our algo did everything perfectly. After that long signal, the strategy gave a short signal. The algo considered the entry point after the closure of the signal candle given by the trend strength indicator. The stop loss value is 1.5 times the ATR pip value, in this case 1.5 times 62.5, which is 93.8 pips, and for the take profit the value is 1 times the ATR pip value, so in this case 62.5 pips. This trade will be a profitable one too. The take profit was hit here, and as you can see our algo did everything perfectly again. The risk per trade that the algo will use is 2% in a bankroll of $100,000. The algo also correctly respects our in-sample data. The arrows that you see are the entries and exits from every trade signal. The remaining years between 2010 and 2021 will be our out-of-sample data in the future to verify that there was no overfitting. To point out the results, I will use the same Excel sheet I used in the last videos. I will now speed up this part of the video a little bit, but you can slow it down to see the results of every single pair. I'll see you in a bit. Here are all our backtest results from 8 years, and we can see that after 5,364 trades, our moving average crossover strategy has an average win rate of 58% and a profit of minus 8.74%. Although many sources on Google and YouTube announce that this strategy is one of the best for forex trading, we can confirm that in reality this is not the case. It is true that some pairs like the USD Swiss franc perform well, but overall, this strategy does not even reach a break-even point. Needless to say, this strategy takes the last place in our ranking. The SSL channel and the rune indicator strategies are in another league when compared to the crossover strategy. Since our backtest has more than 5,000 trades, you can be confident that this is the real performance of this strategy. Of course, you can always change the indicator settings to try to optimize it, but I would advise you to throw this indicator strategy away and try to optimize indicators that in default mode already have a good performance, like the SSL channel indicator. Please leave in the comments which indicators you would like me to test in the next video. I hope you learned something from this video, and don't forget to subscribe, share and like it to support me in bringing more content to you. Be well, thank you, bye bye.